Namaste friends. Today we are going to see some of the provisions under the model GST law which are dealing with the procedural aspects of the very important topic, that is registration. Friends, before starting with the entire process, we will first see what is the legal framework of the registration under the model GST. I need not say that the registration is very important in as much as it determines the tax jurisdictions of the particular authority, as well as it determines to which authority I am supposed to pay the tax. Therefore, friends, the registration plays a very important role in any tax statute. Friends, up till now, under the earlier tax regime, we were applying for registrations with different tax authorities, depending upon under which tax laws we were paying the respective tax. Under the model GST law, the process is little bit simplified. There will be a single tax, namely a GST, and every taxable person is required to obtain the registration in order to discharge his tax liability under the GST law. The persons required to obtain the registrations mandatorily or otherwise are given in Schedule 3 of the model GST law. After Schedule 3, where the statutory provisions are concerned, Section 19 of the Act is very important. Obviously, the very first question that will come to all our mind is whether the existing SSEs who are already registered under the various tax authorities under the earlier laws would also be required to get registered fresh. For this particular purpose, we have got a specific provision under the transitional provisions contained in the model GST law. Section 142 of the Act deals with the same. The registrations pertaining to some specific categories of persons, like the casual taxable persons or non-resident taxable person, is also contained in Section 19A of the model GST law. With every registration, it cannot be said that it is a permanent feature. So obviously, some kind of amendments are going to be expected in every registration. After you file your registration application, it is necessary that if in case the documents furnished at the time of registration undergoes certain change, those changes needs to be intimated to the department. For this particular purpose, we have Section 20 of the model GST law dealing with amendments of the registration. Cancellation of the registration. Section 21 of the model GST law specifies the condition in which either the taxpayer himself can apply for the registration or the tax authorities, when they find it important, they can cancel the registration after adopting a particular process. If in case the SSE is not agreeable to the cancellation of the registration, then he can apply for the tax authorities for revocation of the registration. These provisions are contained in Section 22 of the model. Friends, Schedule 3 of the model GST law deals with who are the persons who are required to obtain registration under the law. The first and foremost are every supplier having certain aggregate turnover of taxable threshold more than the limits which are prescribed under the Act. The term supplier is very well defined under the model GST law. It would suffice to tell that any person who is actually making the supply of the goods or services would be regarded as the supplier under the model GST law. It does not matter whether a particular person is providing a supply on his own account or on behalf of his principal. As long as an agent is actually making the supply, the agent would be regarded as a supplier in respect of that particular supply. As I said, the supplier would be required to get himself registered under the model GST law only if the threshold limit of the exemption is exceeded. I would not use the word exemption because under the model GST law, for exemption, there is a specific limit. I would rather say that if the aggregate turnover of the SSC or the supplier is below 4 lakh rupees, in case of the SSCs belonging to northeastern states, and in other cases if it exceeds 9 lakh rupees, only then such SSC would be liable to take the registrations under the Act. Further, in case the SSC is engaged in providing or supplying only those goods and services which are not liable to tax, such SSCs would not be required to get registration under the Act. Friends, as the aggregate turnover is an important aspect to determine the threshold limit for the purpose of exemption or for the purpose of registration rather, I must say that aggregate turnover or the concept of aggregate turnover needs to be studied in very well detailed manner. It includes, please note, not only the taxable supplies but also the non-taxable supplies, the exempt supplies, export of goods and services to be computed qua a particular SSC on all India basis. So every person having one permanent account number, all the supplies of taxable as well as non-taxable supplies as well as exports as well as exempt linked to that particular PAN would be considered as an aggregate turnover for the purpose of determining whether the limit of rupees 4 lakh or as the case may be rupees 9 lakh mean for the purpose of registration have been met or not. It is however required to be noted that the GST taxes, namely CGST, SGST and IGST, would not be included in the threshold turnover limit for the purpose of this determination of this 4 lakh and 9 lakh rupees amount. Friends, as we know that there are certain specific provisions relating to the job worker which are contained in section 43A of the model GST law. The provision states that when a principal manufacturer supplies the goods for the purpose of job work to his job worker, and if these two people are covered under the specific regime which is contained in section 43A of the Act, then the supply made by that particular principal to the job worker would not be regarded as a supply and it would not attract a tax. Similarly, in such cases when a job worker is covered under the section 43A scheme, after making the labor or exercise of his processing on that particular material which is sent to him by the principal manufacturer, when he sends the furnished or the finished goods back to the job worker or back to the principal manufacturer or to the another job worker for further processing, such supplies would also not be considered as a supply for the purpose of this Act. Friends, the registration, for the purpose of registration, whether the job worker is required to obtain a registration or not, the supply made by such job worker to his principal is not regarded as a aggregate turnover of the job worker. To give you an example, if the goods worth rupees 2000 are sent by the manufacturer to the job worker, and if the job worker does 500 rupees as is processing, making the total aggregate amount of the goods as 2500 and sends these goods back to the principal manufacturer, then 500 rupees would be the only amount which would be reckoned for the purpose of determining the aggregate turnover of the job worker. The 2000 rupees would not be considered in the aggregate turnover of the job worker for the purpose of registration. As I said, the supplier is a person who actually makes the supply. Therefore, while determining the aggregate turnover of a supplier, the supply made by the agent on behalf of his principal is also to be considered as a supply made by the agent only, and such supply is included in the aggregate turnover of an agent and not that of the principal. Friends, there are certain specific provision under the Schedule 3 which are also dealing with the existing SSCs. That is the SSCs which are already registered with the existing laws. It says that all those SSCs which are existingly registered under the earlier provisions of the law would be also required to take a registration under the new law. The question next arises is whether they will have to make the fresh application. The answer would be no. All those SSC which are registered under the present tax authorities would not be required to make a fresh application. Obviously, there is some process which we will deal with it in some time. However, ISD, that is an input service distributor, would be required to make a separate application for the purpose of registration under the GST. Friends, the application for registration has to be made within a prescribed time limit. The time limit is basically 30 days from the date on which a particular supplier becomes liable to get the registration. That is from the time when his threshold turnover or aggregate threshold limit of the aggregate turnover exceeds the 4 lakh rupees or 9 lakh rupees as the case may be. The table given over here basically will tell you what are the effective dates for different people. Friends, whenever there is a transfer or succession of a business as a going concern, it is the transferee who would be required to obtain the registration. Such registration should be obtained by the transferee within a period of 30 days from the date of transfer. So in such case, effective date would be the date of transfer or the succession as the case may be. Friends, in case of the amalgamations or the mergers, demergers, where the scheme is required to be given effect to by the order of the High Court, in such cases also, the transferee company would be required to make a separate application when this scheme is approved by the High Court. The effective date in that case would be the date of certificate of incorporation, which is issued by the Registrar of Companies to a new transferee company for in this particular case. As I said, in all the other cases, it is the date on which the supply made by a particular supplier exceeds the threshold limit of 4 lakh in case of the Northeastern SSC and the threshold limit of 9 lakh in case of other. Friends, there are various other cases in Schedule 3 where this threshold limit of 4 lakh or as the case may be 9 lakh is not applicable. Let us now see which are those cases in which the threshold limit of 4 lakh or 9 lakh is not applicable, and in all those cases, even if there is a single rupee supply made by all these people would be required to obtain the registration under the model GST law. The list of all these people is given on the screen. I will just take you through the list one by one. The first person is a person who is making any interstate taxable supply. It means that whenever there is an interstate taxable supply, for whatever is the amount for which that particular interstate supply has been made, the supplier would be required to obtain the registration with the appropriate tax state. Similarly, the casual taxable persons or non-resident taxable persons would also be required to obtain the registration irrespective of the amount of business that they are going to do in a particular state. What is casual taxable dealer and what is non-resident taxable dealer, that we will see in a little while. Persons who are required to pay tax under the reverse charge mechanism are the next category of the persons who are required to obtain the registration irrespective of the threshold. We all are aware about the concept of the reverse charge mechanism, which is currently prevalent in the service tax laws. Even under the present service tax law, the basic threshold exemption limit of rupees 10 lakh, which is otherwise as applicable to the small scale SSC, is not applicable in case of the cases covered under the reverse charge mechanism. Therefore, even taking the cue from the same system of law, under the GST law also, the persons who are required to pay tax under the reverse charge mechanism will be required to pay tax and get themselves registered irrespective of the threshold turnover limit. Persons who are required to deduct tax under section 37. there are certain types of people, certain categories of persons, mainly the government persons, government offices, who are required to deduct tax at source from supplies received from certain persons. The rate is 1%, and this tax which they are collecting, they are required to deposit to the government within 10 days from the next of the month in which the tax is deducted. These people would also be required to obtain the registration under the model GST law, irrespective of the amount of deduction of tax, and they will accordingly be required to file the return. Other than that, the people who are supplying the goods on behalf of any other person would also be required to take the registration irrespective of the threshold exemption limit. Sorry, threshold limit of the taxable turnover. That means an agent who is supplying the goods on behalf of his principal would be required to obtain the registration without considering the threshold limit of 4 lakh, or as the case may be 9 lakh. Friends, input service distributor is the next category which would be required to obtain the registration. Electronic commerce operator, the persons who supply goods and services other than branded services through electronic commerce operator. An aggregator who supplies the goods under his brand name or trade name, and there could be some notified persons who might be required to obtain the registration without considering the threshold limit of aggregate turnover. Friends, we all know that registration is required to be taken either by every supplier or by all these people who are otherwise required to obtain the registration. The next obvious question is where to register. Friends, to the extent of supplier, every supplier, it is required to be noted that Schedule 3 uses the words that a taxable person is required to register at a place from where he is making a taxable supply. However, friends, whether the term from where taxable supply of goods and services are made is defined under the law or is to be determined on the basis of general parlance is a point that needs a little bit of a deliberation. The point that one needs to see is whether the place of supply of goods or service which is contained in the provisions of the model integrated goods and service tax law could be of any assistance for the purpose of determining where from a place from where the supply is made. Alternatively, whether it can be regarded as a location of the supplier or not, that could also be thought of. There is an example which we have given over here, which will try to explain how a location or a place from where supply is made can be different from the place of supply which is given under the provisions of the IGST law. There is a supplier located in the Maharashtra. Let us assume that he goes to the state of Gujarat. Let us assume for the purpose of this particular activity where he is going to Gujarat, and from Gujarat he is giving or rendering or making some supplies to another customer in Gujarat only. The place of supply is Gujarat. So we have got three situations or two situations over here. A person who is actually a person belonging to Maharashtra and a place of supply, that means the place from where he is making an actual supply. The question that comes to our mind is whether the person from the place from where he makes a supply would be the Maharashtra or the Gujarat. Today, there is not much of a provision or a clarification under the law whether the Maharashtra can be regarded as a place from where the supply is made, or should the place of supply be considered as the only place from where the supply has been made. So these points requires a little bit of a clarity, which perhaps may be coming into the next version of the model GST law. Friends, we will take another example. Let us assume that there is Mr. Delhi, who is from Delhi, having a head office at Delhi. Let us assume that he wants to purchase certain goods which are available in Gujarat, So he goes to Gujarat. There is Mr. Gujarat who is supplying the goods to Mr. Delhi in Gujarat only, and from that Gujarat, Mr. Delhi is sending the goods to his another place of business, which is in Punjab. Friends, here in entire scenario, there are three states involved, namely Delhi, Gujarat, and Punjab. Friends, the location of the supplier or the place from where supply is made can either be Delhi when we are talking Mr. Delhi as a supplier, or it can be Gujarat, that is the place from where the goods are actually moving to the state of Punjab. What we need to really see is whether the movement of goods by Mr. Delhi from Gujarat to Punjab constitutes a supply or not. The supply therefore constitutes an important factor in determining whether there is any place from where that particular supply has been made. If we come to a conclusion that having regard to the facts of this particular example, from Gujarat to Punjab, there is no supply, then the question of determining the place of business or the place from where supply is made, so far as Mr. Delhi is concerned, would not arise in this particular. Friends, other than the examples that we saw just now, as we have already seen, in the list of the persons who are required to obtain mandatory registration, there is also an inclusion of an input service distributor or a person who is required to pay tax under reverse charge mechanism, or a person who is required to deduct tax. These are the people who are not necessarily making the supply but are receiving the supply. Still, they are required to obtain the registration. The phrase "from where the supply is made" would not therefore be applicable in the context of these three people, and therefore it is strongly felt that the concept of from where the supply is made should be properly defined and clearly explained under the model GST law. Friends, the registration provisions contained in the section 19 are very clear in as much as how many registration a person can obtain. The section 19 says that the registration can be obtained in every state. So there would be one registration per state. However, if a particular person has more than one business verticals in a particular state, he may opt for getting separate registrations for different business verticals, although they are belonging to one state. So the mantra in the model GST law is one registration per state. The registration number will be common for whether you are paying SGST, whether you are paying CGST or IGST. However, it would be specific to a particular state. Friends, there are also the provisions for voluntary registration under the model GST law. Voluntary registration basically means that even if I am not required to obtain registration under the law, mainly because my threshold exemption or threshold turnover of aggregate turnover is not exceeding the prescribed limit, still as a supplier I wish to obtain the registration under the law. The obvious reason for the same would be that I do not want to lose the input tax credit. The relationship between the input tax credit and the registration will be explained to you in a while when we will deal with a particular slide. But right now, it may be suffice to say that the provisions concerning the voluntary registrations are also carefully engraved under the model GST law. The permanent account number is the most important document, or I would say a record, without which your GSTIN, that is GST identification number, would not be generated. This number is required in case of all the people who are required to get themselves registered under the model GST law. However, in case of non-residents, an exception has been made. These people would be required to obtain the registration in case of a non-resident dealer or in some other cases. But for that particular purpose, even if there is no permanent account number, they would be granted the registration provided certain prescribed documents are filed by them these prescribed documents are not yet notified. Just like a person is liable to make a registration under the Act, just like a person has got a power to go and voluntarily register himself, similarly, if a particular person who was otherwise liable to obtain registration under the Act fails to obtain such registration, then the powers are granted under the law to the proper officer to mandatorily get that particular person registered under the Act. Other than the provisions relating to the normal taxable suppliers or normal taxable persons, we also have a specific category of taxable persons, namely the United Nations organizations or its specialized agencies, any multilateral financial institutions or organizations which are notified under the United Nations Privileges and Immunities Act, the consulates and embassies of foreign countries, and there could be some other notified persons. These people also would be required to get themselves registered with the relevant tax authorities. The only difference is that they will not be given a GSTIN, that is GST identification number, but there will be a different unique identification code that may be granted to these type of SSC on submission of certain details. Friends, the registration is not my right. Therefore, whenever the authority feels that there is some confusion, some inefficiency, some deficiency in the documents that I have submitted, then they have got a power to reject my registration application, as well as whenever persons like United Nations and other specialized agencies would make an application for allotment of a unique identification number, they can deny the allotment of such a registration to these people, provided the reasonable opportunity of being heard and the principle of natural justice are followed in this particular case. Friends, please note that the GST law today we are facing a problem or a specific feature of dual GST regime, where center as well as state will have a power to levy GST on both goods as well as services. Therefore, whenever a particular person will make an application to a particular prescribed authority, these applications will be sent through a particular process to both central as well as state tax authorities. The rejection of application by either of the authorities would be regarded as a rejection by both the authorities. Similarly, acceptance of the application by either of the authority would be regarded as acceptance by both the authorities. Central government is also empowered to specify certain categories of persons who are exempted or who they feel may be exempted from the process of getting themselves registered under the Act. Other than the provision relating to the application for registration, there are provisions concerning the amendment of registration as well as cancellation of registration under the Act. Friends, we will now see in brief as to what is the process that might be followed when a new registration application would be made. As I have told that the application for registration shall be made through a GST portal which is common. That registration application can either be made by the SSC directly or through the facilitation center which would be specifically created for these particular purposes. If the SSC wants to obtain the registration in more than one state, all the applications concerning more than one state can be uploaded through a single go. However, the requisite information for the purpose of application would be required to be uploaded along with the application form on the site. When the GST portals receives the application, it automatically generates the GSTIN. It also generates a acknowledgement number. These applications would be forwarded by the GST portal to the respective tax authorities, that is state as well as central. In case the state and central has any discrepancy in the documents which are uploaded by the registrant, by the SSC on the portal, they will have to come back to the GST portal intimating the deficiencies to the respective taxable SSC within a normal working period of 3 days. If within these normal working period of 3 days, any communication is not received, then the law provides that the registration shall be deemed to be granted. Friends, when the application of registration is uploaded by the SSC into the portals, he has got two options. Either he can upload the documents using his digital signature, or in some cases, even if the digital signature is not applied, the application can be uploaded. However, in this latter case, the person would be required to send the requisite documents to the prescribed authorities within a period of 30 days. If the prescribed authorities, although they have scrutinized or vetted your prima facie information and granted you the registration within the 3 working days, if they do not get the physical hard copy of the signed documents from such persons within a period of 30 days, then the system will automatically give an error message to these authorities, and the authorities will then be free to take any action against such person, including the action for cancellation of the registration with prospective effect. Friends, it is also required to be known that there may be a timing difference between the time when the state authorities grant you the registration as well as when the central authorities grant you the registration. Say for example, after uploading the registration application, first the central authorities gives you a registration, gives your registration a green signal. Then till the time the normal working period of 3 days is over, your registration shall not be deemed to have been granted under the other GST authority. However, as soon as the period of 3 common working days is over and there is no query whatsoever from the other tax department, then the registration shall be deemed to have been granted under the both GST laws, that is under the state as well as under the center. Friends, we will now see what is the syntax, that is the format of this GSTIN. Friends, it is a 15-digit code. The first 2 digit represents the state's code. So unless and until there is a state information available in your registration form, the GSTIN cannot be generated. There are digits 3 to 12 which would represent a PAN of a particular person. Digit 13 would be an entity code. As we see that an SSE is permitted to have more than one registration in a single state when there are more than one business verticals. This entity code represents how many registration a particular SSE is having in a particular state. The registration numbers under digit number 13 can either be numeric, that is 1 to 9, or it can be alphabets, that is A to Z. So like that, 35 numbers are already provided for by the system in case of a multiple registration within the state. Digit number 14 is kept blank and digit number 15 would be a check digit. Friends, as we have seen what is the process for registration by new applicants, let us quickly go through the process which has been little bit explained in section 142 of the Act as regards the migration of the existing taxpayers. As we have seen that the existing taxpayers would be required to mandatorily obtain the registration under Schedule 3, they need not make a fresh application except in the case of ISD. The existing registered who are either registered with the center or the state would be automatically migrated and would be issued GSTIN on a provisional basis, which would be valid for a period of 6 months. Now the question arises as to how this GSTIN would be created, from where the department or the GST portal would capture the document. Friends, when a particular SSE is registered under the prevalent law, say for example with the excise department, generally a person registered with the excise department is also registered with the VAT department. So the data available with the VAT department would be considered as the source data for the purpose of granting of this particular registration. So source data would be taken by the GSTN mainly from the statewide department. Obviously, it has been mentioned in the business process that the data which is already available with the state department or with the excise department may not be adequate, as to there may be various different fields that the government may require the information on under the model GST regime. These informations would be required to be submitted by the SSC online within a period of 6 months to make the registration complete. In this case, the provisional registration would become final if the relevant details are not submitted within a period of 6 months or in such additional period as may be extended by a particular rule or by a particular notification. Then in that particular case, the provisional registration shall be deemed to be cancelled with retrospective effect. Friends, it is necessary to know that when it comes to a service tax department, it may be possible that a particular person who is only providing a service is today registered with the service tax authority. In such case, the first and foremost question that the GST portal would be required to determine is to what state this particular person should be allotted to. Because in that particular case, the GST portal would not have the information about the state portion. What would GST portal do in such case? It would first try to get the details of existing service tax SSC from CBEC or from the service tax authorities. It will then check whether the PAN in respect of which these particular SSCs are given, on the basis of which these particular SSCs are given the service tax registration number, have already been allotted any GSTIN based on the data which has been captured from VAT department or not. If these people are not allotted any GSTIN based on the data which was shared by the VAT department or the excise department, then in that case, these persons would be required to obtain a specific information about the states in which they are wanting to register. For this particular purpose, some online portal might be made available through which these persons can update information as to their state, and in that case the state service tax people who are existingly registered under the service tax would also be granted a automatic GSTIN number. But friends, please note, unless and until these state codes are updated, the state information is updated, the GSTIN cannot be computed, it cannot be generated, because as we have already seen, the format of GSTIN, the first two digits represents the state. The question is now, what would happen if a particular person who was otherwise required to obtain the registration did not obtain so? Here friends, we would like to see some of the provisions concerning the input tax credit which has got some relationship with you becoming the registrar. Friends, apparently it seems that unless and until a person is a registered taxable person, he would not be entitled to claim the benefit of the input tax credit that is otherwise available to him in accordance with the provisions of the model GST law. Suppose a new person is making a fresh application, then unless and until he makes that application within the 30 days from the effective date, he would not be entitled to the input tax credit which is available at his disposal when he was required to make such a registration. I will try to illustrate this aspect with a simple example. Suppose a person was liable to obtain a registration, say on 1st of June 2016. Suppose he did not make the registration application within 30 days. However, between 1st of June till the date on which he actually makes an application, which is obviously beyond 30 days, if there is some input tax credit which is available with him, say for example 4,000 rupees, and on 1st of June, say rupees 2,000 rupees another credit which is available to him, so total 6,000 rupees credit is available with him, merely because he did not make an application within 30 days from 1st of June, this entire credit of 6,000 appears to be denied to the SSC even subsequently he takes a registration. Friends, one needs to really see whether there can be any other way by which the 6,000 rupees credits can still be admitted under the provisions of the law. This proposition needs to be tested, especially in light of the fact that a person can avail a SINVAT credit up to a maximum period of 1 year under the provisions of the model GST law. Therefore, merely by not making an application within a period of 30 days, can an SSC argue that the credit that he is taking subsequently, that is from the time when he is taking a registration, that credit he is availing itself within a period of 1 year, and therefore he would be entitled to take and avail that particular credit. Whether that argument would suffice or not is a matter of time that one needs to really see. Friends, we will now see the provisions containing the registration which deals with the casual taxable person as well as a person who is a non-resident taxable person. Friends, the casual taxable person and non-resident taxable persons belongs to the same species. Casual taxable persons means a person who occasionally undertakes a business from a particular state in which he does not have a fixed place of business. When it comes to a non-resident taxable person, it means a person who occasionally undertakes a business in India, although he does not have a fixed place of business in India. Friends, as we know that there is a time period within which one needs to apply for the registration, the time limit of that 30 days is also applicable in case of a casual taxable person as well as non-resident taxable person. The only thing is that in case of the casual taxable persons and non-resident taxable persons, the registration certificate would be valid only for a temporary period of 90 days. In case an application is made for an extension, this period can be further extended by a period of 90 days. One unique feature in respect of the casual dealers and non-resident taxable dealer is that at the time of registration, the entire liability arising out of the supply of goods and services is estimated by the department. There is a specific column dealing with the estimation of liability under the application form designed for the casual taxable persons and non-resident taxable person. Based on this estimation, they would be required to pay the entire liability in advance. It could be possibility that there would be two different checks or two different instruments for the purpose of making this payment. One instrument would be paid to the state government, another instrument would be paid to the central government. However, whatever payment is being made, that payment would be credited to the electronic cash ledger of the non-resident taxable person or casual taxable person, and whatever is the tax liability that will be adjusted out of this particular ledger. Friends, we will now deal with the provision concerning cancellation of the registration. The first and foremost question is, who can cancel the registration? Obviously, there are two people who can cancel this registration. One is the SSC himself and other is the proper officer. Friends, the application for cancellation can be made by the SSC in the circumstances which are displayed before you on the screen. There are basically three circumstances listed. One is a transfer of a business or a discontinuance of the business. You may recollect that when we dealt with who are required to obtain the registration, we said that in case of a transfer of a business, transferee would be required to obtain a fresh registration. This is because in such cases the transferor who is discontinuing the business or transferring the business have the power or have the option to apply for the cancellation of its existing registration. In case of change in the constitution of business, also there can be cancellation of the registration. One may say that this is merely an amendment in the registration and for that cancellation of the registration would not require. However, we can think of a typical case when there is a partnership firm having two partners. If for some reason one of the partner passed away, is dead, in that particular case, that particular partnership firm gets converted into a sole proprietary concern. In that case, what would be important to note is that the permanent account number of the SSE, which hitherto was the number of the firm, would subsequently become the permanent account number of the sole proprietary concern, and therefore in such a situation the firm would be required to apply for the cancellation and the proprietor would be required to apply for a new registration. Friends, other than that, it may be possible that the circumstances mentioned in Schedule 3 are no longer applicable to me. That means, suppose my threshold exemption limit is, my threshold turnover limit comes down or for some reason I am not required to make any deduct any tax, or the provisions relating to the reverse charge are not applicable to me. In all those cases also there can be an application by the SSE for cancellation of the registration. Obviously the person who has voluntarily applied for the registration in spite of the fact that the conditions mentioned in schedule 3 are not attracted, for them perhaps it appears that the mode of cancellation or application for registration voluntarily may not be applicable. One needs to really see whether that is the intent of the law, or there are only provisions to that extent which are yet to be included in the provisions of the law. Friends, the another aspect that one needs to see is the cancellation of the registration by the officer on his own motion. There are various circumstances in which the proper officer can cancel the registration. These circumstances are mentioned before you, where the registered taxable person has contravened the provisions of the law. Friends, I believe the intent of this particular provision is not on a normal non-compliance of the law or the rule, but when such a compliance or non-compliance is done with an intention to evade the payment of the tax or to deliberately not to comply with the provisions of the law, only in these cases an extreme case of cancellation of the registration can happen. If a composition dealer has not furnished the returns for a 3 consecutive tax period, then also it is the authority given to the proper officer that he can cancel the registration of such composition dealer. Similarly, in case of other persons, the limit would be 6 months from the date of registration. This would be typically the case when a particular person has applied for the voluntary registration but has not commenced any business for a period of 6 months. On that particular case also registration can be cancelled. In case of a person other than composition scheme, if the person has not filed any return for a consecutive period of 6 months, in that case also the power has been given to the officer to cancel the registration. Now one may ask a situation, what would happen if a particular person files the return for 1 month, does not file a return for the 2nd month, again files the return for the 3rd month, again fails to file the return for the 4th month, again files the return for the 5th month. In that case, whether this continuous period of 6 months would be interpreted as a continuous period? Friends, first of all, let us understand that such scenario cannot happen under the GST law, because under the GST law, as the law it is prevalent today, the person would not be allowed to file his return unless until he has filed his returns for the earlier period. So where a particular person files the return for the first period, does not file the return for the second period, again tries to file the return for the third period, he would not be allowed unless and until the return for the second period has been filed. Other than this, in cases where the registration has been obtained by means of fraud, willful statement or suppression of the facts, in that case also the registration can be cancelled. The most important aspects to be known in this particular case is that in that case registration can be cancelled with retrospective effect. Even in the cases where the registration is required to be cancelled under the authority given by the law, the notice of hearing and opportunity of being heard is a must, and unless and until that notice is given, no cancellation of registration can take place. There are certain references under the business processes relating to the registration which says that in such cases where the authority requires the cancellation of the registration on some technical grounds like non-filing of the return or non-commencement of the business, some automatic 7 system generated SCN would be generated and would be sent to the particular person. Therefore, the particular process of opportunity of being heard would be primarily driven by the system, and it may not be directly from the manual intervention of a particular officer except in the extreme scenarios. Friends, we have now seen what would happen in which scenarios my registration would be cancelled. It is also required to be seen what would happen if my registration is cancelled. Am I be waived of whatever taxes I was supposed to pay for the period for which otherwise registered? Answer is no. You would continue to be registered for all the taxes for which you had earlier obtained the registration, in spite of the fact that your registration is cancelled for a retrospective period. Cancellation of the registration under the one act automatically would act as a cancellation of registration under the other act. What is the effect of cancellation? Effect of cancellation would be that whatever inputs are lying in the finished stock or at the stock of the person, ITC pertaining to that particular credit would be required to be paid. Whereas, however, if the finished goods or the transaction value of these goods is higher than the value in respect of which you have paid ITC, then the tax relating to that transaction value would be required to be paid. In respect of capital goods, again, the ITC pertaining to those capital goods which have already been availed by the taxable person would be required to be paid after deducting therefrom certain points based on depreciation or percentage based reduction method. This figure would be compared with the transaction value of the capital asset. If the tax generated or the tax applicable on the transaction value is a higher than the input tax credit which the person is required to otherwise pay, then the higher of the two amount shall be applicable. Friends, cancellation is not the end. The law provides for revocation of cancellation in case the SSC is not agreeable to such cancellation. In that particular scenario, the application for revocation would be required to be made within the period of 30 days from the date of service of cancellation order. It is required to be noted that this particular hearing of revocation would also be given to the SSC, and only after giving an opportunity being heard, the authorities will determine whether his application for revocation of the cancellation should be accepted or rejected. Thus, friends, we will now try to summarize whatever we have tried to learn and discuss in this particular presentation. We have seen who are the persons who are liable to obtain the registration under the provisions of the model GST law. What is the place where the persons would be required to obtain the registration, whether the place is clear in the model GST law or whether there are some other provisions concerning the place which are required to be incorporated under the model GST law. That also we have seen with the help of various examples. We have seen what is the process of new registration under the model GST law to the extent it was explained in the joint committee report in the business process on registration. The provisions relating to the migration of the existing registered taxable persons have also been dealt with. The special provisions concerning the casual taxable persons and non-resident taxable persons, the relationship between the input tax credit and the registration of the taxable person, and last but not the least, the cancellation of the registration and the revocation of the cancellation by the SSC. With this, friends, I thank you a lot and I hope you have enjoyed this particular session. I am hopeful that I have tried to make the concept of registration look little bit simpler, and I hope that there are many more lectures to come on various aspects of GST law in the time to come. Thank you a lot.